Good morning and welcome to day one of the trade war between the United States, Canada, China, and Mexico, with tariffs of receiving goods from these countries to the United States of up to 25%. Let's do a S&P 500, Bitcoin, and precious metal price check-in first. Silver is up 0.7% to $32.15 an ounce. Gold is up to $2,942.60 an ounce. That's a 1.14% rise. S&P 500, it's only 9 a.m., so we're still waiting to see some of those numbers, but people are expecting a drop of at least 2% today. And Bitcoin is down to $83,091. That is a 3.6% drop. So we know today's Tuesday, March 4th, 2025, and it turns out that Trump's trade war tariffs were not a bluff. So here's what's going on. The reason that the markets might experience a bloodbath, at least in the short term from this announcement, is that the taxes on our received goods are going to increase. So that means the cost to the American citizen is going to rise on things that are from Canada, China, and Mexico. So Trump has a very clear message here: buy American products. Now, the S&P 500 and the stock market as a whole is going to be impacted heavily by the tech stocks, which make up most of the S&P 500, because most of our technology items like chips are produced and made in these countries. So production is going to slow down. The cost of making them is going to rise. Therefore, as the cost of these products in America rise, sales are going to decline. So this isn't just something we're just going to feel on March 4th and the next 2 months. This is something that we're going to see when the next iPhone comes out or the next MacBook comes out. So this is going to have some ripple effects for some time. But the idea is that you buy American products so that we're not giving as much money to these countries. So there is a pro and con argument, but we're just calling it like it is for right now. So in precious metals, why is gold and silver rising today? Well, people are fearful over the potential retaliation, which we're seeing from China and Canada already now, that is just going to make the trade war even worse. And the American people are going to feel it even more, especially if they need products from Canada, Mexico, and China. So this uncertainty and fear is shifting people away from the markets like the S&P 500, the New York Stock Exchange, and putting them into gold and silver to at least wait it out until some kind of resolution comes. Now, important to keep in mind with precious metals is that it's often tied to the strength of the US dollar. Now, the US dollar is at a 3-month low. It's its lowest point since December, and it is down. The US dollar index is down 0.5% today. So that is down because the Federal Reserve will most likely need to cut rates this year. Now, the Federal Reserve cuts rates when we are in an unstable economic time in order to stimulate growth. So here's what's actually happening. When rates come down, it's easier for a business to take out a loan, and it's easier for businesses who are just starting or who already exist to borrow money. When you borrow, let's say, $1 million at a 3% interest rate, then you're only owing $30,000 on that. On a 5% interest rate, you're owing $50,000. That's quite a difference. But there are pros and cons to lower interest rates. For instance, the everyday man who has a high yield savings account isn't going to see as much yield from that high yield savings account. For example, interest rates now in the high yield savings are around 4% a year. So if you hold $100,000 in your high yield savings account, you can expect about $4,000 a year in net profit from lending that money to your high yield savings account. But if that comes down, you're not going to see as much money from that HYSA. So some pros and cons. We're probably going to feel a lot more cons, at least in the short term, but still people are flocking to gold and silver as a safe haven asset because this is an uncertain time. It's a tale as old as time. One thing that people may do is actually sell off some of their gold and silver as it rises in order to buy the equity dip. So this is one question I'm going to pose to you. Are you going to hold gold and silver, or do you foresee yourself maybe selling an ounce or two here and there in order to buy some of the dips in, let's say, the S&P 500 or some of these broad market index funds? Let me know what you think. I'll keep you updated and have a great day.